Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin versus the US dollar currency index, or DXY. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So we've talked a lot about Bitcoin and its relationship with the US dollar currency index, and how when one's moving up, the other one tends to be moving down, and vice versa. And one of the things you can look at over this bear market is the general expectation that if Bitcoin is going out down, you would expect the dollar to be going up. And that's more or less what we've seen. In fact, the dollar really saw some type of a double bottom. One was in December of 2020, and then another one in June of 2021. And what's interesting is if you go back to 2021, we talked about this. We actually talked about, if you go back to January, I actually have a video where we talked about the US dollar currency index and some concerning signs about this just sort of bottoming out at the same level that we bottomed out in 2018. And we ended up moving back up for a little while. We had a double bottom in May. And then you can see the dollar has just blasted off to levels really we haven't seen since since way over here in 2002. So I mean we haven't the dollar has not been this high in essentially 20 years. So we are coming up to the to the 115 to 120 range. Perhaps an area of interest is this range up here. Could offer some potential resistance on the US dollar. Looking at like 118, 119, 120. You could also, and we've drawn this channel on here as well, you could also look at, say, a channel like this and argue that it's making its way back up to the top of sort of this macro channel that the dollar has been in for really a long period of time. I mean, this has been going on really since 2008, 2009. What I find interesting is that Bitcoin, we know that Bitcoin has done very, very well over the last 10 years, despite the fact that the dollar was actually in a macro uptrend. So like the Bitcoin bull market of 2017 occurred during this brief period where the dollar went down. And then the bull market that we saw in 2020 and early 2021 also occurred when the dollar went down. But the bear markets for Bitcoin occurred in, say, like 2014 when the dollar went up, and it's going up now when the dollar's going up. And we also had a brief bear market in the dollar. We had a bull market in the dollar here in 2018. We know that Bitcoin, even in 2018, was stuck in traffic on Struggle Street. So these are things we see time and time again. One thing we could do to maybe better sort of show this trend is we can pull up the dollar and then just sort of overlay it with Bitcoin on the same chart. So we'll go ahead and do that. And you can see, I mean, generally speaking, as we see the dollar continue to go up, we would expect Bitcoin to continue to remain under a lot of pressure. And if the dollar keeps rising like this, I mean, it seems like it's only a matter of time before Bitcoin, the pressure is just going to be too much for risk assets in general to bear if we continue to see this sustained move by the US dollar currency index. But again, you can see just how explosive this move has been by the dollar ever since Bitcoin put in its final top. But also, really, you could argue that the dollar bull market started over here, back at Bitcoin's first top in earlier 2021. And again, looking at the Bitcoin bull market, no surprise that it corresponded to the dollar bear. No surprise that this bull market over here by Bitcoin corresponded to this dollar bear. And at the same time, no surprise that Bitcoin's bear market corresponded to this sort of bull market on the US dollar currency index. So these are important things to continue to watch. I mean, you guys know my general thoughts in 2022. Again, cash is king, and I mean the US dollar still does remain king. And, I mean, if assuming we get some type of blow off top or something on the US dollar currency index at some point, then I think you could see the shift back to risk assets. I mean, if we go look at these on weekly candles. Like, look at the dollar here. Let's zoom in and look at this. Look at this. Look at this weekly candle by the dollar. It's up 3%. I mean, that's a lot. I don't even know if we've had a weekly candle that was 3% in a long time. In fact, the last candle that we had, I believe, that was 3% might have been all the way. Is this in 3? No, might have all the way been back in the March of 2020. Could have been the last one. So, I mean, the dollar it's potentially showing some elements of accelerating here out of this consolidation phase at around 110. And you can see that the dollar just kind of came up here at 110. We were spending increasingly more amounts of time above 110 and not getting immediately rejected down. And it's like sort of just like broke through this barrier and all hell's breaking loose, right? So the dollar is up massively this week from, I mean, it opened the week at around 109.6 and now it's all the way up to about almost, I mean, it was actually at 113 earlier today. It hit, below the high is 113.068. So fairly massive move by the dollar. We'll continue to keep an eye on it over the coming months because ultimately the transition from from being risk off to being risk on will likely also be reflected in some type of major top on the U.S. dollar currency index. So something that we really should follow very, very closely over the coming weeks and months to get a better idea of this transition. And the other thing I wanted to remind you of is if you go look at the dollar, I'm going to go over to my website and look at the dollar. I mean, you can see Bitcoin's chart overlaid with the dollar here. But if you look at the dollar and you color code it by, say, Bitcoin risk, you can see in general as the dollar goes up, the risk on Bitcoin goes down. So hopefully this is useful in trying to better understand the like where Bitcoin sits with respect to the U.S. dollar and the way that these risk assets behave with the U.S. dollar. And this is what we call the U.S. dollar a wrecking ball right now. I mean, it's not picking names. It's just basically everything else. Most everything else is struggling right now because of the strength of the U.S. dollar. And again, as long as the Fed continues to remain this hawkish, there really shouldn't be any general expectations that this rally immediately has to stop. We could always have pit stops along the way where we get some type of pullback and consolidation phase for a few weeks. We've seen that actually a number of times. And we had a pullback at 105 that lasted a few weeks. We had a pullback at 109 that lasted a few weeks. At some point, in the coming weeks, we'll likely see another pullback. But perhaps, the pullback might just be going to retest the prior top, right? I mean, like this top over here was retested later on this pullback. And then if you were to go look at say this top, we sort of hung out around there for a little while. And so perhaps in the future, whenever this move cools off, we could have a longer term pullback on the US dollar. But it doesn't even necessarily mean that the bull market's over, right? It could just be some further consolidation before ultimately trending higher. So the dollar is something that we need to keep a close eye on to try to better understand the transition from risk off to being, from being risk off to being risk on. And I do think the charts are fairly clear that there is definitely an inverse correlation between Bitcoin and the U.S. dollar currency index. But I hope you guys enjoyed it today. Make sure you subscribe if you're not subscribed. We also do have the Into the Cryptoverse newsletter. You can find a link to that in the description below or in the pinned comment. See you guys next time. Bye.